Stepping into the Monday morning market without a plan leaves you completely exposed. Diving straight into a gap-up opening is a mathematical risk. We are looking at a clear conflict. Local markets finished the week weak, with the Nifty 50 closing below 23,900. But offshore indicators like the Gift Nifty point higher, signaling a gap-up opening. To handle this, we need to clear out the noise. Open your trading terminal right now and create a completely blank watch list. Name it April 27 Triggers. Building a specific 4-part digital checklist right here on your screen replaces emotional reactions with a rigid plan. This is how we defend against the volatility of the opening bell. Step 1 is locking in our boundaries. Pull up your Nifty 50 index chart and select the horizontal line tool from your interface. With the index closing Friday just under 23,900, technical analysts are zeroing in on the next immediate hurdle. Place a thick horizontal line at 23,800. This represents the technical floor that has historically prevented deeper sell-offs. On the upside, we have to account for the supply zone where the recent rally stalled. Paint a shaded box from 24,200 up to 24,500 to mark this resistance area. This 23,800 level is critical because there is no established technical support immediately beneath it. If the index crosses below this line, the lack of historical buying pressure suggests a slide all the way down to 23,000. To the north, the market is currently trapped under heavy selling pressure. We need to see the price break past that 24,500 ceiling to confirm that buyers have actually regained control of the momentum. When 9:15 a.m. hits on Monday, your first move is to measure the exact opening price strictly against these two zones. Keep your cursor entirely away from the buy button until you see exactly where we land on this grid. Mapping these support and resistance levels directly onto your interface creates a psychological anchor. It forces you to wait for the market to prove its direction, shifting your approach from reactive guessing to strategic execution. Now let's populate that blank watchlist panel. In this interface, we are adding two specific names to the top, Ultratech Cement and Coal India. Both of these major players are scheduled to release their corporate earnings. The numbers they report will set the immediate momentum for the broader construction and energy sectors. Right-click both tickers and set a rigid 15-minute time alert for the opening bell. You need to know exactly how they behave in that first quarter hour of trading. Next, add major Indian pharmaceutical and engineering tickers to the middle section of your list. In this split-screen layout, you can see the catalyst driving these additions. India and New Zealand are expected to sign a free trade pact Monday. By grouping these export-heavy stocks tightly together on your screen, you can immediately spot if institutional buyers are stepping in across the entire sector rather than just bumping up a single stock. Grounding your watch list in these root-cause macroeconomic triggers gives you a structural, predictive edge. You are tracking the actual drivers of volume instead of chasing random price spikes. Now, we have to address the distressed IT sector. Last week, the IT index dropped 5, but if the price rapidly drops below Friday's close, that is a clear indicator that the sell-off is continuing. Do not buy into IT stocks blindly just because they look cheaper after a 5% drop. Tying your decisions entirely to preset binary price alerts removes the urge to guess. If the alert fires above the line, you have a signal. If it doesn't, you stay out, entirely avoiding the risk of catching a falling knife. Before the bell rings, verify your completed layout. This interface shows your bounded Nifty 50 chart on the left, your macro-driven watch lists neatly organized on the right, and your IT sector alerts fully active. When 9:15 hits, your protocol is simple. Watch how the expected Gift Nifty gap up interacts with that rigid 24,200 resistance zone we drew earlier. From that moment on, let your preset alerts dictate your execution. If an alert rings, you evaluate the trade. If it is silent, you wait. By transforming abstract market forecasts into a rigid visual interface, you eliminate the need to think on your feet. This checklist is your operational shield against Monday morning chaos.